What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. As always, we have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. Real quick, if you're interested in receiving 5 to 10 swing trade ideas per week, then go ahead and sign up for the free newsletter. That's the first link in the description. That goes out every Sunday night. We're also on Instagram if you want to check us out there. That's at tradebrigade.co, and we do have a Discord chat if you want to chat with myself and other traders during market hours. Let's hop into the analysis. Starting off on our SPY chart as always, except this time it is the monthly chart. We did close out the month of January on Friday's trading session. So that being said, we're going to look at the monthly bar, and you can see that it's quite nasty. We have an inverted hammer candle at a all-time high, which normally would signify to us that we're going to see some sort of pullback soon. This is sort of a topping candle, if you will. The wick represents all the sellers. This last week of the month was really telling and pushed the prices much lower. So we'll really see what happens next. I wouldn't really expect much more in terms of upward action. This sort of, to me, looks like a top. If we look back through recent history, there's no real inverted hammers that are even similar in magnitude. Even if we come back, you can see we're all the way back here at sort of the 2008 crash and sell-off, if you will. There was no inverted hammer of that magnitude, or even an inverted hammer at all, that signified that. So this is going to be pretty interesting to see how this one plays out. Maybe we have a deeper pullback throughout the year. Maybe we see a red year in the broad market. But we'll sort of have to wait and see what happens. We do have our targets mapped out. This is a very key level. As you can see, we have 1, 2, and then 3, 4, 5, 6 touches here. So this 294, yeah, that is going to be a very key level. It's just very, very clear here on the monthly chart. If we drill down to the weekly, so coming down to the weekly, you can see that essentially what we had was a big gap down on Monday where the futures just totally tanked on Sunday there, and then we filled the gap, and then we got rejected from the gap. So it was a gap fill reversal where we see price come right back up to the low of this candle, which represents the gap fill, and then prices back right off of it. So that's what we have here, a gap fill reversal. Whether or not we go lower, again, we do have all of our supports mapped out for us. If this gives here at 320, we're looking to come back down to our next one at 315, so on and so forth. If that one gives, we do have support coming into play at 307.05. But let's get down into the daily just to look at some more key levels. So on our daily chart, you can see just how key this 50 SMA and this price support level at 320 is. If that gives, it does leave quite a ways to go down. Our next target, once the 50 SMA sort of goes and prices really start selling off hard, you can see just how high a volume this sell-off was compared to some previous days. Of course, this was a really green buying day here, but we did have very elevated selling levels compared to our recent volume, so something to note there. But once that 50 SMA usually gives on the daily, the next stop is really the 200, so that is quite a ways away. Again, the 294 level is kind of what we were targeting on the monthly chart as a reasonable area of pullback, and that's, you can see, just below the 200 there. If we scroll back throughout history, you can see, again, once that 50 SMA gives, usually it gets a little bit nastier. Didn't quite make it to the 200 here. Once it gave here, almost made it back down to that 200 SMA there. So again, it just seems to happen that once this 50 SMA breaks, which is the blue line, we come back down to our 200 SMA, which is the green line. So that's something to watch out for as we progress into the next month of February and forward, really just depending on if these supports keep giving. The 200 SMA could be a very viable target. In which case I'll probably add to my Roth IRA and longer-term positions there, and then dollar cost average on any sort of move through and lower. But for now, we are just focusing on what happens as we open up next week and really start the month off. If we break down below 320, again, mapped out for us. If we start to move back in the upwards direction, which based on this candle here, it's engulfing. You can see 1, 2, 3, all of these days in the past, even this where the big gap down sort of happened, it's a very bearish thing to see. So that being said, again, it looks like we do want to move lower based on the volume and candle shape. If we do, however, see some sort of move to the upside, our resistances are mapped out. This is obviously a very key level where that gap fill and sort of little spike above happened, and that's at 327.50 to play a round number. Anything higher than that is really this 1, 2, 3, 4, 5 quintuple top, I guess you would call it here, just below the all-time high, which is at 332.18, and then we will mark in the new all-time high up here at 332.95, so 333 if you want to play a round number on that one. So the Qs representing the tech sector and essentially the NASDAQ, you can see it's not quite as bearish. We didn't engulf all of the days. Essentially, that Monday is still lower, and we do have a higher low that has formed here. But again, still look at the huge red volume. It looks like things could continue to get nasty. We haven't made it to our 50 SMA yet, but that would be a first target should we come back down into Monday's low and break that. And then obviously we have quick touch here, 1, 2. If that gives our 50 SMA is the target. That's right around 212.45. And anything lower than that, again, our 200 SMA, once that 50 gives, is sort of like a magnet. It'll pull prices back down to it, and that's right around 195.47. That'll slowly continue to creep up as, prices or the moving average tries to catch back up to this. So keep that in mind should we see a break of that 50 SMA. Our supports are really mapped out for us. This one is very key here, as you can see at 206, just based on touch, and then support here. So I'd say our key supports are 212 and 206. On the upside, resistance is mapped out. We first have to get back above this key support that we're now below. So now resistance at 219.89. And then we have here, which price was exactly rejected from on Friday at 223.56. And then the all-time high essentially at 225.88. So the Qs having a more sharp descent than all of our other indexes. You can see again on very big red volume. It sort of looks like to me on this one, now that the 50 SMA has given up, this key support has given up, this gap has filled. Boom, we are coming back down to our next support here. But if this sort of gives, the 200 SMA is really the target on this one. That price is right around 156. So keep that in mind if we continue to see red in the upcoming week. I didn't mention it on SPY and the Qs, but again, all those gaps that we've been pointing out for weeks and weeks in a row now could all become potential downside targets. So 200 SMA on this one, and then a last-ditch effort here at 155. If we really get lower than that, then you can see there's really no structure here where the price is to the left. So our next support below is at 145, just about, you can see down here. Again, should we see any sort of crazy reversal out of the market, even though based on the shape of the candle and volume, I don't think that's likely at this point, but our resistance is mapped out. Again, we are going to have to battle back up through this 162 level. This level has proven to be resistance once we were back below it. So we were above, broke out above, fake breakout, again, resistance, so that will be a resistance point on the way back up. Again, lots of structure here, so that could be a place that price really struggles to get back up through. But if we do, again, resistance is mapped out 167, 168 just about, and then our swing high sort of up here at 170.56. Alrighty guys, if you're still with me, then I'm sure you're enjoying the analysis. Be sure to give the video a thumbs up. I genuinely would appreciate it, and I think the YouTube algorithm would as well. We're also pretty close to 1,000 subscribers, which is really cool. So be sure to subscribe. These videos come out every Sunday to give you an edge for the trading week ahead. Without further ado, let's get into these companies. Alrighty, I'm going to move through these a little bit quicker just because we spent a little bit more time on the broad market than usual. So starting off with Apple, you can see we do have a candle that sort of reflects what's happening in SPY and the broad market as a whole. Big red day. Even though earnings were pretty positive, we saw a gap up that day. We did put in a new all-time high, so we'll mark that off there at 327.85. Right now we're looking for support to come into play where this white dotted line is. You can see it's pretty historic, and price tends to follow and bounce off of that level. So if we can get in there, maybe a call for an intraday bounce might be a nice play up to resistance, which is going to be here now that we're below it at 312.45. Anything lower than that, and we sort of have these areas that are flag consolidations on the chart that we're sort of targeting as support. So our next one, if this sort of target doesn't hold up, is going to be down below at $300.27. After that, our next set is down here at 293.85. And then from there, it's kind of a little ways lower. You can see that next price level is at 282.65. Should we see a big turnaround here, and we do see a better bounce than just a day trade bounce off of this white dotted line, then we have our next major resistance and sort of area of consolidation on the chart, which is right around 317.26. Anything higher than that is here at 322, and 327.65 is our next all-time high resistance. So Netflix also had a really good earnings, and also it seems to be holding up quite well to the market, which is something that we pointed out last week as well. So something to keep in mind there is that this is performing positive compared to the negative market. So right now we are seeing some consolidation, or what we could call a bull flag at this point, where this is the pole of the flag and this is the flag itself. A nice hammer candle here actually on Friday right around a support level. So nice to see that. Maybe we see a early bounce in Netflix coming up next week. Our target for resistance is up here at 361.79, as noted by sort of this wick up here. So should we see a move to the upside, that's our target. Anything higher than that, and we're looking at 386. That's sort of a little ways away at this point, but it is our next major resistance based on sort of this area up here. Anything to the downside, which right now it doesn't look like it's that probable. We're sort of consolidating on lower volume, as you can see down here, which is a good thing. So if we do see some sort of breakdown, I don't think it's likely at this point, but if the market just sort of pulls Netflix down with it, which I don't think it will, we're sort of looking for our moving averages to provide some support back down in this level, right around 321.21. So Tesla continues to get out of control, a huge gap up on earnings here, and it's holding the gap, which is quite surprising. Well, maybe not so much considering what it did here on earnings. So holding the gap up, our new area of resistance is obviously up here at the new all-time highs, $653. Anything higher than that, and it's blue sky territories, as always, that's whole and half dollar resistance intraday, as well as any prominent levels that do form. If we do see a gap fill and any sort of breakdown below this low here, let's just mark that in as a reminder here. So anything lower than this 318, 319-ish level, the low of this candle, which to be exact is 318 on the dot, surprising. And we're looking for a gap fill to the high of this green sort of doji here, and the high of that candle is at $589.80 something cents, probably 89 cents. There we go. That's what the cursor clicked to. So that's what we're looking for on the downside. We covered the upside as blue sky territories. Anything really lower than the gap fill and our next sort of area of support on the chart kind of comes in a little earlier than this actually, which is here at $556.95. No surprises here on Alibaba with the whole coronavirus thing and a big move to the downside. China markets are down on the news, and it's no surprise. So right now we do have a higher set of lows starting to form from our $200.71 support. So that is a good thing to see. We do need to get back above this blue line here, which is the 50 SMA. If we can, we have resistance overhead through this sort of chop zone at between 211 and 213. Anything higher than that, and we're looking at resistance at 218.04 just based on some of these data points that we have in here. Should we see a move lower, we are targeting back down here at $200.71, which, likely with the virus news and just China markets being down right now, that is the likely course of action. So look for support intraday bounce possibly to happen at $200.71 if we get down to it. Again, that means that this double bottom sort of thing that's happening here does have to give for us to get to that target. Anything lower, again, mapped out for us, 195.08. Lower than that is 188.10. So Facebook had positive earnings, but you can see that the market didn't really like the earnings even though they were positive. So that's one reason why I sort of stay away from earnings in general. Even though they can be positive, sometimes the stock will react negatively, so on and so forth. So again, seeing a bearish engulfer here sort of breaking down below the low of the previous day, I think our next target is, again, continuing lower here, sort of following the market, and our next sort of area of support on the chart is 195.09, so keep that area in mind. It's just a little ways above that 200 SMA that might act as a magnet and pull it right through this support level, so that's something to keep in mind should we see any sort of major bloodshed develop on Facebook. We do have a support just below that, which, again, if we look to our left, is a very data-heavy point. You can see 1, 2, 3, all these touches in here really make that a very key support. That's at 191.20. Anything lower than that, and we're getting a little bit further away, that's quite a stretch, and that's at 179.62. But something to keep in mind, very realistic should we see any sort of major market breakdown here. On the way up, again, we have to fight back through these supports, which we have now violated. So we have $203, $205, and then 208 here based on some of this chop that's sort of in this area. So this should act as a major congestion zone on the way back up. If we can get back into this clear territory, maybe the gap fills or starts to fill partially, comes back into this level at 212.66, the low of this candle here, where there's some structure, and that could be a point of resistance sort of 50% between here and here, and then really it's just this recent swing high resistance that we have to target and sort of battle through on the upside. NVIDIA following sort of the cues and what that looks like. Again, it's a higher low than our Monday low, so that's something that we need to keep in mind. So if we do break down below this Monday's low, which is at 232.22, and sort of has some history here as well, so we can actually just mark that in. That's right around this area on the chart. You can see there, 232 we'll call it to play a nice round number, perfect on Monday's low. Again, that 50 SMA is going to act as a magnet and sort of drag prices back down to it. If it gives, I would say our next reasonable target, likely this one will just sort of break with it when the 50 SMA pulls prices down here. So 228.85 might provide an intraday support bounce, but really after that it's 223. and then 211 based on some of this congestion back down in the chart there. Any sort of move to the upside, again, we have our resistances mapped out. We have this level here, which has been a double top sort of thing, which is at 252.81, and then the recent swing high up here at 259.50. And you can see this white line just at the very, very top of the screen. That's at 266.14. That's quite a ways away. So Microsoft continuing to move in the upwards direction regardless of market news. So that's cool to see that some relative strength here, sort of like Netflix, it's going in the upwards direction even though the market is going down. I wouldn't be surprised if we sell off and sort of close this gap all the way, come back down to this 167.50-ish level. That just seems like what it wants to do based on these two candles here and what the whole market is doing. So keep an eye out for that to provide an intraday bounce, if anything. So that's at 167.50. Anything lower than that and we see more of a breakdown, then we're looking for this level here at 163.12. You can see it's acted as support or resistance and then support here. And then really if that breaks, then I would just start targeting that 50 SMA, the blue line, and this rising support trend line, which is the white dotted one. And then, depending on how nasty things get, if they do get nasty in the first place, then there's quite a gap to go to the downside here, where the next really structure that we have to base our support off of is at 148.51. If we do see a reversal on the gap fill, just a gap fill reversal here, then obviously we have to retarget our all-time high resistance up here at 174.05, and then it's really blue sky territories after that, whole and half dollars, as well as any intraday levels that do form. So Amazon, again, the talk of the town on Friday, huge gap up, monster gap really, all the way up here to $2,055, just absolutely blew this consolidation right out of the water, but you can see it sold off hard all day. Big, massive red volume. I wouldn't be surprised if it continues to sell off early into next week. Our next support down below is going to be this 1950 level, and that's sort of halfway between the gap, if you will. So something to keep in mind, the 50% fib retracement is sort of a key support at this point based on some of our resistance here. And really anything lower than that, and we're targeting our structure back here. So that's at 1916, 1900, and then 1987, just based on some of these levels in here. It's quite a ways away. Should we see any sort of move to the upside here, obviously we have our recent resistance where prices gapped up and sold off of, which was at 2055. But in between there and here, you're just going to have to look on the intraday charts for some support and resistances to show themselves. Let's just do it now, actually. So let's drop down to, let's say, the 30-minute. And you can see if we look here a little bit closer on Amazon, I would call a support level sort of in this area, about 50% of the day, if you will. So you can see support here. That's where a bounce sort of developed from. And then price was sort of got caught up there, caught up there, caught up there again. And then it was clear resistance once we broke back down below it. That's at 2024.95. And then obviously our all-time high here. It looks like there's some resistance that is sort of in this area. If my mouse would work, there we go. That's at 2048 as well. So that's sort of a more granular approach to Amazon. Alrighty guys, so that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything at all, then be sure to give the video a thumbs up. If you have any suggestions for me, be sure to leave them down below in the comments section. Again, we're pretty close to 1,000 subscribers. That is an awesome, awesome feat in my opinion. I wish you a green trading week, and as always, keep your eyes peeled for the newsletter this Sunday.